Have you ever wondered why mutual funds aren't dead compared to ETFs? Well, let's delve into the intriguing world of mutual funds and their enduring relevance in the financial market. The fascinating truth is that mutual funds are still the backbone of most 401k investment choices, not ETFs. So we're here to help you understand this investment type, and be sure to stay tuned to the end for important tips to protect your financial future. So you're ready to learn more about mutual funds in the picture of your 401k as a buffet, a smorgasbord of investment options, and among the menu of financial dishes, mutual funds are the main course. Why is that, you ask? The answer lies in their innate structure and convenience. Many 401k investment choices are age-based or target retirement date funds. These are all-in-one, convenient and low-cost options, perfect for those dipping their toes into the investment pool for the first time. Just simply select the future year you'll likely retire in, and you're done. Think of them as the set menu at a restaurant, a balanced, well-thought-out meal with a starter, main, and dessert, all for a fixed low cost with lower risk and peace of mind for the long haul. But mutual funds aren't just for the novices. For the more seasoned investors, the buffet offers a variety of mutual fund choices to build their own portfolio allocation. You could opt for growth or value stock mutual funds, or perhaps choose broad index funds like those tracking the S&P 500 or total stock market. Bond funds, on the other hand, are like the comforting, reliable soup option at the buffet. Certain 401k plans even offer a brokerage option. This is like being given the freedom to whip up your own dish at the buffet, allowing for self-directed trading of individual stocks within the 401k. The 401k is an excellent savings account type sponsored by most employers, focused on funding a retirement nest egg. It's like a piggy bank that grows over time, allowing you to save a percentage of your pay that the employer will then match with an additional amount. In conclusion, mutual funds, with their versatility and adaptability, are the unsung heroes of the 401k investment world. They provide an array of choices to cater to diverse investment palates, from the beginner to the seasoned investor. Mutual funds are far from dead. They are thriving in 401k investment choices. You might be wondering what makes mutual funds particularly attractive for new investors. Let's dive into the world of mutual funds and explore why they are an excellent choice for those who are just starting their investment journey. Firstly, one of the biggest advantages of mutual funds is their convenience. As a new investor, you might not have the time or expertise to research and manage a diverse portfolio of individual stocks and bonds. This is where mutual funds come in. They are managed by experienced professionals who do the heavy lifting for you. This allows you to focus on other aspects of your life while your money works for you. Another noteworthy benefit of mutual funds is their all-in-one nature. Many 401k plans offer age-based or target retirement date funds. These funds adjust their allocation of stocks, bonds, and other assets based on your age and expected retirement date. As you get closer to retirement, the fund automatically shifts towards more conservative investments. This means you don't have to worry about rebalancing your portfolio as you age. But what about the cost? Be pleased to know that mutual funds are typically a low-cost investment option. To their scale, they can offer lower transaction costs than if you were to buy and sell individual stocks and bonds on your own. Additionally, many mutual funds have low minimum investment requirements, making them accessible to investors with smaller amounts of capital. Mutual funds also offer diversification, which is key to managing risk. Instead of putting all your eggs in one basket, mutual funds spread your investment across a wide range of stocks and bonds. This means that if one company or sector performs poorly, the impact on your overall investment is minimized. Lastly, mutual funds provide liquidity. You can buy or sell shares in a mutual fund on any business day. This gives you the flexibility to adjust your investment as your financial goals or circumstances change. So, there you have it. As a new investor, mutual funds offer a low-cost, all-in-one solution for your 401k investment. They provide convenience, professional management, diversification, and liquidity, making them a compelling option for those new to investing. But what about those who have been in the investment game for a while? They too can find value in the world of mutual funds. And if you've made it this far and find the information we provide helpful, be sure to like, subscribe, and comment below. We'll keep sharing new and informative videos for your learning journey. For those experienced investors who have a clear vision of their financial future, Mutual funds offer a host of opportunities to shape their own portfolio. They can navigate through a vast array of mutual funds that align with their investment strategy, be it growth or value stock mutual funds, index funds like the S&P 500, or bond funds. This isn't a one-size-fits-all approach, but rather a personalized journey where investors can take the reins and craft their portfolio to echo their investment philosophy. For instance, growth stock mutual funds could be a fit for those who are comfortable with higher risk for potential higher returns. Value stock mutual funds, on the other hand, might appeal to investors who prefer companies that are undervalued by the market and could provide steady returns over time. Or combine certain portions of holdings to growth and value or dividend stocks to customize a portfolio. And let's not forget about index funds such as the S&P 500. These funds aim to replicate the performance of a specific index and can provide broad market exposure, offering a balance between risk and reward and usually very low expenses. For the hands-on investors who like to play a more active role, some 401k plans offer a brokerage option. This feature allows for self-directed trading of individual stocks within their 401k. It's like having your own mini stock market portfolio within your retirement account. But remember, with great power comes great responsibility. This approach requires a deeper understanding of the market dynamics and should align with your risk tolerance and investment horizon. So, whether you're a conservative investor who prefers the steady rhythm of bond funds, or an aggressive investor who enjoys the roller coaster ride of growth funds, or somewhere in between, there's a mutual fund for you. In the end, it's about understanding your financial goals and risk tolerance, then aligning them with the right mix of mutual funds. Because even for the experienced investor, mutual funds offer a wide range of choices for portfolio allocation. The key to successful 401k investment lies in participation and strategy. Broadly speaking, your 401k is a savings account on steroids, designed to build your retirement nest egg. It's a vehicle that allows you to save a portion of your income, typically around 6%, which your employer generously matches, dollar for dollar or at least 50 cents on the dollar, up to the same percentage you've contributed. It's an opportunity that's too good to pass up because the employer match contributions is like getting free money just for participating. By simply participating, you're doubling your money from the get-go in many cases. Now, once you've made the smart move to participate, the next step is to develop a strategy. This is where things get interesting. Remember, this isn't a sprint, it's a marathon. You're investing for the long haul, and that means you can afford to ride out the market's ups and downs. In terms of strategy, you have a buffet of options at your disposal. You could opt for age-based or target retirement date funds, which are all-in-one, low-cost, and convenient, especially for new investors. For those with a bit more experience under their belts, there are specific mutual fund choices that allow you to construct your own portfolio allocation, like growth or value stock mutual funds, index funds such as the S&P 500, or bond funds. Taking a long-term view of your 401k allows for growth and some volatility. Yes, the market may go down, but remember, as long as you're saving from each paycheck, you'll be buying more shares. This dollar cost averaging over time will likely result in long-term growth in account value. Now, it's important to balance your risk tolerance with how aggressive you can be to grow your account balance. Exposure to stocks can be a reasonable risk, but it should be evaluated against your personal risk tolerance. Participation and strategy are the twin pillars of successful 401k investment. By saving consistently, balancing your portfolio, and sticking to your strategy, you can ensure that your 401k grows steadily, providing a comfortable nest egg for your golden years. In the world of mutual funds, review and continuity are essential. Just like any other journey, your investment journey requires regular checks and adjustments to ensure you're on the right path. This involves reviewing the performance and cost of your mutual funds over time. You've probably heard the saying, time in the market, not timing the market. It's a reminder that investing isn't about picking the perfect moment to buy or sell. Instead, it's about letting your investments grow over the long term. Mutual funds, especially those in your 401k, are perfectly designed for this approach. They're meant to be held for many years, riding out the market's ups and downs. When review your mutual funds, consider their 5 to 10-year track record. How have they performed compared to their comparable index? Are they providing a good return on your investment? Also, consider their cost. Are the fees reasonable or are they eating into your returns? Remember, low-cost funds often provide the best value, especially for long-term investors. Now let's talk about continuity. This is particularly important when you leave an employer. Your 401k is still your money. It's crucial to stay aware of where your account is held. Consider rolling over your 401k to an individual retirement account or IRA. By doing this, you're ensuring your money remains fully invested, continues to grow, and stays protected from early withdrawal taxes and penalties. Continuity also means maintaining a consistent investment strategy. You've chosen your funds for a reason based on your risk tolerance, financial goals, and investment horizon. Don't let short-term market fluctuations throw you off course. Stay the course and trust in your strategy. Remember that the key to a successful 401k investment journey is consistency. Consistency in saving from each paycheck, consistently investing in your chosen funds, and consistently reviewing and adjusting your strategy as needed. Review your mutual funds regularly, keep in mind the long-term view, and ensure continuity for a successful 401k investment journey.